amid signs that the Trump administration could be softening its tone towards China and as markets perform a reversal from extreme levels. I'm Fiona Cincotta at StoneX, and today I'll be looking into this with market analyst Razan Hilal from forex.com as we look through some markets and levels to be watching. Thank you for joining me, Razan.
Good morning, Fiona. There's lots of uncertainty about the sustainability of yesterday's reversal across the market, and it's great to be back here to chat about it.
Excellent. And so, yes, we've got lots to be talking about. Let's kick off with the euro US dollar. Obviously, we've had some data out this morning. The euro has been one of the currencies that has benefited from recent weakness in the dollar over the past few weeks, but we have seen it come away from its recent multi-year high. What levels are you watching and what are you seeing on the charts, the euro US dollar?
Yes, definitely. After the dollar's rebound yesterday from the critical 98 support, we saw a notable retreat for the euro dollar with approximately 200 points back towards the 113 support zone. And currently, we can still see the euro dollar trading back above the 114 mark. We can still see a bit of a positive edge for the euro against the dollar, as we still don't have much of a confirmed sustainability for those reversals, as we still don't have established trade deals, especially with reciprocal tariffs across the globe. So there's still a bit of risk against the US dollar in the markets, and that reversal just needs a bit of confirmation to be able to take the lead across the markets. If not, we can still be looking at the 116 resistance. If you manage to climb back above that level, we can be jumping towards 2021 highs. We're talking about the 117 and the 120 zones. If not, if we're going to fall back below the 113 level, then we can be eyeing back the 112, 111, and 110 level by level, recharging that overbought momentum that's currently resembling that last seen in 2020 on the daily time frames on both the euro dollar and from the other side, the oversold momentum on the US dollar index.
Interesting. So talking about the US dollar there, obviously gold very much related to moves in the US dollar, as well as this sort of risk-off moves that have been in the markets over the past few weeks. Gold did reach that record high earlier this week. We've seen it pull away. What levels are you watching?
Yes, after gold hit the record $3,500 yesterday, it also managed to rebound alongside the market with approximately 200 points back towards the 3,300 support zone, or 3,290. And that's a critical support level to watch for gold. Now, as still we don't have complete certainty in the markets, we can still see possible buying the dip opportunities for gold as a safe haven asset across the market. So if gold does manage to climb back above 3,350, we might be able to climb back towards 3,400, 3,500. Now, looking at the monthly time frame, the overall possible aim for gold is towards the 4,000 mark, which is the target of a cup and handle pattern that has been stretching across the history of the gold chart. But if we do manage to hold a possible momentum recharge back below the 3,290, we might be dropping back towards 3,100, 2,950, 2,800. These are critical support levels I'm looking at for a potential momentum recharge before we can possibly resume that bull trend. But of course, if fundamentals kick in and we have further tensions across the markets, further uncertainty across the markets, then gold can just proceed with that extreme bullish momentum.
Excellent. And then talking about safe havens, the Japanese yen, that has also benefited from the risk-off mode that we've seen over the past few weeks. The US dollar, Japanese yen is another chart I know you've been watching. Tell us what levels you're looking at there.
Yes, so looking at the chart of the dollar yen, when the US dollar index hit the 98 support, the dollar yen was also reaching towards a critical support level, which are the lows last seen in September 2024. So we're talking about the 139 to the 140 support zone. And that zone also happens to be the golden 618 retracement of the overall uptrend between 2023 and 2024 for the dollar yen. So I was eyeing that critical level. If we were able to breach that level, then we might be in for further trouble for the dollar, but we are still holding over there. We managed to climb back above 141 in tandem with the bounce of the US dollar index, but it's still an uncertain bounce. We still need confirmation across the markets, and also eyeing the inflation indicators from Tokyo on Friday. If you have increase in inflation for Japan and a possible increase in BOJ rate hike expectations, then that might also ripple further trouble for the pair.
Excellent. And now just moving our attention finally to US equities. Now, so that has been quite choppy recently as well. We did see a recovery yesterday towards the 5,400 level on the S&P 500. What is your technical analysis on that chart?
Looking at the S&P 500 and the US indices in general, they're still holding a positive rebound from extreme oversold levels right when we had the 90-day delay in tariffs across the globe. So after that positive rebound, they're still holding with that rebound. It's pretty strong. We're holding above critical levels over here. If we do manage to sustain highs above 5,500, then we might have more potential bullish, more confident bullish forecast alongside the US indices. And if not, if we're going to still have a further uncertainty in the markets, then we might retreat back towards 5,400 and possibly 4,800 critical support zone that we're currently eyeing for either deeper lows for 2025 or just holding until we have clarity for the overall trade wars across the globe.
Brilliant. Well, listen, thank you so much for your analysis as always, Razan. Lovely to catch up with you again.
It was lovely as well. Thank you.
Thank you. For more videos like this, please do like and subscribe.